Let's just get more now on the implications for Japanese investors from Christian Takushi, fund manager with Swisscanto Asset Management. Thank you very much, Indy, for joining us. Just give us your thoughts on the outcome of this election. Naoto remaining Prime Minister of Japan.
Thanks for having us. Actually, these results are kind of positive for the market in general, especially for bond markets. Maybe it's neutral to slightly positive for equity markets. Definitely good news, strong news for the Japanese yen. Yeah, continuity. It's all about continuity.
And we've seen the yen hit fresh 15-year highs against the dollar. Can we expect further gains for both the yen and Japanese government bonds?
Oh, yes. We continue to see firm Japanese bonds and also a stronger yen. I mean, the yen could easily go to 80 now and probably be beyond that.
Now, stronger yen is, of course, hurting Japanese exporters. Of course, companies like Toyota and Sony, which derive a large amount of their sales abroad. What does a Kan victory mean for the prospects of the government intervening in the currency market?
I think the Kan government is too weak, in a sense, to intervene in the market. And it doesn't have the strong vote to do that either. Don't forget that just a couple of months ago, the population in Japan gave a slap in the face to this government. He wanted to do a few things. Japanese population, as usual, doesn't want their leaders or governments to do something too strong or too major. And the government will shy away from doing anything, to stop the yen. Now, this is the reason why now traders are betting on stronger yen. And chances are we may hit 78 soon.
So what does that mean for Japanese companies? What needs to happen to improve prospects for them going ahead?
Well, short term, a stronger yen reduces the value of the export sales. So there is a problem for the short term, and this year and next year's, profits of export companies. But long term, a strong yen makes these companies more competitive. If I speak as a trained economist, you allow me to speak as an economist, a strong currency is not necessarily very bad for Japan. Obviously, all the leaders or CEOs of Japanese export companies say it's killing us, but it's not true. They can actually improve productivity, move some production overseas. Actually, they're doing that already. So it's not as dramatic for exporters as it sounds. Of course, market players are very terrified of a strong yen. They just looking at this quarter's earnings.
But Christian, interesting. You're saying that long term this could actually be a good thing. If exporters are hurt, doesn't that drive Japanese manufacturers abroad? Doesn't that have a negative impact at home in terms of jobs?
No, the number of jobs in Japan, the number of people in Japan is shrinking. The labor force is shrinking for years now. Actually, Japanese companies are moving overseas for the last 8-9 years. They're moving overseas in a major drive. This is not necessarily what is going to make them move. They're already moving. And I think there is no change to that.
Well, you raise a very interesting question about the long-term sort of demographic imbalances, if you like, an aging population. What can the government do to address this? How are they going to pay for their social security system?
They will not address this, and it's very difficult for them to address this. They need a very clear vote from the population in Japan to do that. No government in Japan has received a strong mandate from the population in the last 60 years to do anything on this. I doubt the Japanese population will want to give a strong mandate for that. I doubt that.
Christian Takushi, fund manager at Swisscanto Asset Management, thanks very much for your time. Appreciate it.